I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know. This post-Fed meeting week featured ample opportunity for reinforcement and clarification of the Fed's plans, with several speeches from policymakers, including Chair Powell. Addressing a meeting of economists, Powell acknowledged that inflation is much too high, while the labor market is very strong. Powell also repeated the Fed's commitment to restoring price stability while preserving a strong labor market. Validating the Fed's labor market assessment, jobless claims registered under 200,000, notching a more than 50-year low as companies grapple with finding and keeping the workers they need. Meanwhile, long-term rates climbed as investors were reminded of the Fed's earnest commitment to inflation fighting. Mortgage rates joined in, advancing more than a quarter percentage point in 1 week. Relative to 1 year ago, today's mortgage payment for buyers financing 80% of the median-priced home listing is $375 or 30% higher, with much of that increase coming in the last few months as mortgage rates surged. We're starting to see the impact of higher housing costs. New home sales slipped in February as the median sales price rose and as a larger share of new home inventory is still not yet started or under construction. In other words, new homes for sale are not exactly the move-in ready homes that buyers are searching for. Pending home sales, an index of contract signings that precede existing home sales, also registered lower. As we approach the best week of the year to list your home for sale, housing market conditions still lean in favor of sellers. Our weekly housing data showed that prices regained a bit of momentum, homes continue to sell quickly, and new listings declined again, providing less competition for sellers. Although home sales indicators slipped from last month and last year, they remain well above pre-pandemic pace, thanks to a large number of young households eager to find a place of their own, and double-digit rent growth, giving a good reason to persist with a home search. In fact, our February rental report showed that typical asking rents rose more than 17% in the last year, to a new high of nearly $1,800, with the largest growth coming in the Sun Belt. You'll find the details and our housing data for download at Realtor.com/research, and follow us on Twitter for real-time updates.